Despite the S&P 500 hitting another record high today, 1/5 of its stocks are still at least 20% off their 52-week highs, including names like Celgene, American Airlines, Twitter, putting them squarely in bear market territory. So is the leadership in this market too narrow, Evan? And have you been surprised that it continues to melt up?
No, I mean, in fairness to Mike Santoli said this was what was going to happen, or at least he indicated that it was a very strong possibility that we'd get this grind higher. He said this a couple of months ago when it was not as obvious. I would say it doesn't feel like super party, like we're at record highs, everything's going great kind of thing. It feels like it'll have trouble getting much higher unless there's some positive surprises. But for the time being, I think you have two worlds. You have the world of the U.S. economy, and everything's going great. Jay Powell said everything's going great. Everything's hunky-dory, low unemployment, everything's fantastic. And then you got this world of macroeconomic or really global uncertainty. You got the U.S. China trade war. You have NAFTA still up in the air. You have Iranian sanctions, Russian sanctions. You have Donald Trump and the whole White House circus that's going on, possible impeachment. And these two worlds, the market is interpreting these two worlds independently. They're saying these two worlds are separate. They have nothing to do with each other. And the real question is whether in the next month these worlds are going to collide.
Yeah, let me broaden that out a little bit. So we have 13,000 clients, and they're calling in saying, hey, look, we have we're largely indexed. Why isn't our fund, why aren't they doing as well? Why aren't we hitting all-time highs? And as we look at global markets and U.S. markets together, we look at the MSCI ACWI, what we see is that the U.S. market's only been beat by two other markets, India and Norway. So unless you put all your money into India and Norway, you're not achieving these record highs. You look at, the Chinese market is down 20%, and that's not before taking into account the currency. So somehow the U.S. market's able to overlook all the things that Evan was talking about, but the global markets certainly haven't. And so I think it's not just a story about a dichotomy within the U.S. market, it's really a dichotomy between the U.S. and everywhere else in the world.
You can have that gap closed, obviously, a couple different ways, one of which is the rest of the world has a little bit of a phase of outperformance, and the other one is, the U.S. maybe, which has been a haven, maybe, which has been benefiting from some extraordinary circumstances with the tax cut and everything else, declines a little bit. But, I mean, it's funny, Evan, you say, yeah, you sort of saw this was coming. Well, you could actually look at this and say the market's up 7% year to date in the U.S., earnings are up 20%. Why are we up high, right? Yeah. So maybe all those things you think the market's ignoring are just restraining it.
That's true. And I think in fairness, I think that is a little bit of what's going on right now, which is it doesn't feel, to what Jim was saying, it doesn't feel. We don't have people running around here with hats. We don't have, people jumping up and down, buying. You don't have retail people going, I got to get into this market.
That's because the Dow's not at a record.
Maybe that's it. But
we do round number hats.
You want a 2874 hat?
You want I think it's almost 2875. But it doesn't have that feel that you would typically expect.
Evan, isn't that the point of what is helping drive us higher? There's not a lot of euphoria. I think Kramer calls it an underdog market. Everybody wants to hate it and find all these bearish reasons, and that's partially why it keeps climbing up.
I mean, you got to look at valuations, right? If you look at price to sales ratios in the U.S., we're like 2 standard deviations away from where we've been over the last 20 years. Margins don't have much more room to expand, especially if we get into a more inflationary situation. And so it's very difficult to sort of fight eventual margin contraction, fight valuations, given where price to sales ratio are today. Look at the rest of the world, it looks substantially cheaper, and that's why we're more bullish that the rest of the world catches up to the U.S. and we kind of bump along.